Welcome everyone. Today I'll be taking you through Airtel Africa. It's become a wee bit of a meme in the channel and I'm glad I could renew the video. They are a massive telecoms giant based in Africa, mainly in the markets of Nigeria and Kenya, among a few others. Now, their snowflake analysis here over in Simply Wall Street is very enticing. 5 out of 6 in valuation. They score 3 out of 6 in dividend. They're pretty financially healthy, and past performance and future are both pretty good as well. Trading at 77.5% below their estimated fair value, which means they are definitely a company worth watching. Well, we'll be jumping back to this. First things first, though, I want to take you over to their website. Now, as any telecoms provider, they supply quite a lot to two of the largest markets in Africa. And we can see from this wee map here, Nigeria being one of them. They have Niger, Chad, Kenya, and several others. Now, they are the second largest telecoms operator in Africa. They operate in 14 markets, and they have over 46.7 million data customers and 26.2 million Airtel Money users. They also have 128.4 million customers, which is pretty crazy. Now, a lot of my love for this stock is based on the growth. The market potential in Africa and the population growth is incredible, as well as they have 33% of the population in their markets are aged between 10 and 24, and the population footprint is forecast to grow at a CAGR, which is compound annual growth rate, of 2.7% between 2020 and 2025. All these factors add together to make it a very nice looking stock. Now, when it comes to services, everything from your typical, voice, making any type of phone call, data, 4G, and eventually 5G. They have their mobile money, Airtel TV, of course, and Airtel Business. Pretty similar to any telecoms here in the UK. Now, they are traded on the London Stock Exchange. Their ticker symbol is AAF. Now, let's jump over here to their Wikipedia page. It is from here you can see that they're the number one operator in quite a lot of these markets. When it comes to one of the larger ones, Kenya, they're the second largest operator with 9 million customers. Nigeria, they're the third largest operator, but they have a staggering 33.3 million subscribers alone, just behind Globacom and MTN Nigeria. So there's definitely a lot of room to grow in a lot of these markets, especially in Nigeria. Now, jump back over to Simply Wall Street. Let's get into some of the analytics, look through their Airtel Africa here. Earnings forecast to grow 17.35% per year. They've been growing at 30% over the past 5 years, massive growth, and they've been trading at a good value compared to peers in industry. Now, they haven't been paying a dividend all that long, since about either 2019 or 2020, we'll see later on, is when they started payments. And of course, that was through the likes of COVID. Unstable dividend track record is one of the issues, so we'll bear that in mind. Market cap, 4.3 billion. They're currently trading at £1.15. They had a height there of about £1.69 back there in July of 2022. So they're 20% down over the last year. We'll see how they've been once we look at the chart here. Competitors include the likes of Vodafone and BT, although BT don't really operate that much in the African market. Vodafone do through Vodacom, so something to bear in mind. Now, let's take out the last 3 years. They started trading back in, what was it, January there? No, it was July 1st, 2019 is when they started trading. They IPO'd at about 71 pence. Now, it went down. You could have picked them up for as low as 28 pence back in March of 2020 due to COVID. Now, they've went from strength to strength, almost 5x in little over 2 years. Now, they've had yet another dip, and they actually had a dividend decrease, but not to worry, we'll look more into that later in the video. Now, they're a little more volatile in the industry that they're in, with 6.3% weekly movements on average. When it comes down to the company itself, founded in 2018, listed of course in 2019, their employees 3,893. Their CEO, Singan Ogunsanan, I probably butchered that name, but you get the idea there. You can be sure to have a wee pause if you want to read more through some of the things. Their services are quite diversified. So again, from voice to data, from 2G, 3G, 4G, eventually 5G, digital payment wallets, and many, many more. So they're very diversified, as most typical telecoms businesses are. When it comes to their fundamentals, their pay ratio is 8.3. We'll see how that is versus an industry as a whole against some of the UK players, Vodafone and BT in mind. Their price to sales ratio is 1.1 times. When it comes to their earnings and revenue, over 5 billion in revenue, 1.88 billion in the cost of revenue, which leaves them with a 62.49% gross margin of 3.1 billion. Once you take out their other expenses, they are left with a net profit margin of 12.8%. Their next earnings date is February 2nd. Be sure to keep an eye on the channel if you want to see that. I will be doing a video exclusively on them, as I do own 600 shares in Airtel Africa, forming the bulk or one of the largest holdings in my UK dividend portfolio. Pay ratio 30%, and the yield is 2.9. Now, let's go down to their valuation and see how they stack up against Vodafone and BT. They are slightly higher in the PE against BT, but they are much lower than Vodafone, and on average with their peers, nearly 4 times as low. Well, from 12.4 to 8.3. When it comes to industry average, most telecoms, it seems to sit around 15 for price to earnings ratio. AAF, of course, only at 8.3, so that's a good sign as well. When it comes to the price to earnings versus a fair ratio, again, fair ratio is 11.8, so they're lower than that. And then their discounted cash flow model, they are a whopping 76.8% undervalued. So I believe I got in at a really good time. And I will be pound cost averaging into Airtel Africa in the foreseeable future. Be sure to check out the UK dividend portfolio if you want to have a wee look at how that develops. For value, £4.98. Now, they have never got even remotely close to that number. £1.70, of course, was their max. So that is something that I obviously bear in mind. It is a model, and we will be looking at intrinsic value, which again also has a very positive reflection on Airtel. Now, future growth. This is where I believe they're going to shine into the future. 7.4% forecasted annual growth rate. So you can see here, back in 2019, revenue of $3.2 billion, earnings $374 million. As of their last earnings call, they have nearly doubled their revenue, $5 billion, and nearly doubled their earnings to $642 million. But what's more is, by 2025, again, they are projected to grow nearly 17.4% per year, and that is massive. When it comes to free cash flow, they have $1.19 billion in free cash flow. That, again, like a lot of telecoms operators, massive cash flow. So again, we'll have to keep an eye on them for that. When it comes to past performance, they have had a 30% growth. 2017, it appears they were having a loss there of nearly 630 million, growing to profitability in 2019 as they were listed, and then, as you can tell, they've continued to go from strength to strength. We'll throw in operating expenses, which have increased somewhat to 238 million a year as of last year there. They have high quality earnings and a net profit margin higher than the previous year. The industry itself projected to grow 23.3%. In the market, Europe 9.8%, but of course that isn't their market. Their market is in fact Africa. So, financial health, they score pretty healthy out of this, 4 out of 6. $1.76 billion in short-term assets against their $3.11 billion in short-term liabilities. But when it comes to long-term, $8.43 billion against their $3.48 billion in long-term liabilities. So obviously it looks quite a lot healthier. Now, when it comes to this, their debt was significantly high at $6.6 billion in 2018. That came down to $3.4, and as of last year, it is currently $1.9 billion, and they have $3.5 billion in equity, giving them a 55.5% ratio. When we throw in cash and equivalents of $681 million, again, that brings up the gap, and we have their earnings call not but over a week and a bit away, so that'll be interesting to see. Their debt coverage has been well covered by operating cash flow, 105%, and interest payments, 5.3 times coverage. We'll have a look at their balance sheet and the makeup of it here. And then we can go down to their dividend. Now it scores 3 out of 6. It's notable, not very high, not stable, not growing, covered by earnings and cash flow. But let me give the wee argument for them in this one, that despite what has been happening to their dividend per share, decreasing, it is forecast in the future, as of this year, to actually grow a wee bit. So again, their earnings call will be very important for a bit of information on that. And if the projections are, of course, correct, it's looking really good. And their earnings per share has also been increasing steadily over the last 2 years. Now, this company has a lot of time and to prove their dividend track record. That's very true. So that has to be taken into account, no doubt. Now, when it comes to earnings payout, 30%, cash payout, 13%, which means that they retain a massive amount of their cash flow, which they can use and reinvest to grow into maybe more markets and to grow their market share where they are. So that's very encouraging to see. Average management tenure, 3.7 years. CEO, as you can see, has been in the job only a year and a half, actually. Now, leadership team and the board are both considered quite experienced, so that's good to see. When it comes to ownership, a few insiders and board members have been buying, which is again an encouraging sign. 60% ownership from public companies, 26% from institutions, and 11% from private companies. The top one, of course, here is Bharti Airtel Limited, based in India and overseas. We have, of course, a few other ones. Qatar Holdings and BlackRock are also in the top 10. Now, let's jump over to another really useful website that I use, Alpha Spread. It gives intrinsic value, which takes the DCF model that we've seen in Simply Wall Street and the relative value model, adds them together and gives you an average. In this case, it gives them a £3.37 per share, which is a 67% undervaluation. Alpha Spread is also quite useful, different style of graphics to Simply Wall Street, but gives you fundamental analysis, wee bit into their finances, a different way of looking at their balance sheet, and several others, Wall Street targets as well. Now, there is a wee free plan, and you can look at 3 companies per week for free. All links are in the description if you want to check them out. Over to another free, completely easy to use resource, Google Finance. Simply type in AAF stock or Airtel Africa stock. It'll bring you up this page. You can do everything from check competitors over to financials. It gives you a glimpse of the financials here, pay ratio and dividend yield. It's given a 3.88%. Simply Wall Street's given 2.94. Obviously, the dividend has been fluctuating as the share price went up and down in the last month. And, of course, we'll have to see the yield once they announce the next payment as well. Over to Dividend Max, one of my favourite websites that goes into depth on the dividend itself. It's given them a 3.9% yield as well. Ex-dividend date, 29th of June. Declaration date for the dividend is actually going to be the 10th of May, but the earnings call will still be something very important to look at and see how the market reacts to how they've been doing over the last year. If you had 100 shares, well, actually, I'll put in my 600 shares. I got a payment of about, I think I got £9. And the reason for that is I actually bought quite a few shares, 200, I think, after the ex-dividend date of the 10th of November. I need to have had them on the 9th, which is the day before the ex-dividend date, in order to be entitled to the payment. They pay twice a year, so every 6 months you'll get an interim and a final payment. Usually the final payment is slightly higher than the interim, just the way things work. Payment date is when the money lands into your account, and yeah. You also check out the annual dividend chart here, and as you can see, there hasn't been a lot of data on them. There's also dividend yields, company info, and news articles on Simply Wall Street, or on Dividend Max here. Over to Trading 212, you can see here that I currently have 600 shares Airtel Africa, valued at £694. I am down 11.6%. Reason for that is I actually bought near enough at the height, and I've been pound cost averaging to get my price lower, and I'll be picking up a few more in the coming weeks. I'll be excited to see the earnings and see how that goes as well. If it's good news, value goes up. If it's mediocre news, the value should maintain. And if it's bad news, well, we all know what happens there. And I will, of course, be keeping a close eye on it. If you want to see more on Airtel Africa, be sure to check out the video when it comes out. And I hope this video has helped. Be sure all the resources are in the description. Be sure to check them out. And I'll see you all in the next one. Thank you.